Okay, good morning, students. Today we'll be covering the subject strategic financial management, and the topic which will be covered will be foreign exchange exposure and risk management. And I am CA Pravesh Agi, your faculty for this topic. And now we know that this topic is a bit tricky and one of the most difficult topics of the CA finance subject. So let's understand, and I'll be covering today only the basics parts and some questions from the study material too. But in the following lectures, we'll have most of the study material questions being coming up in my future lectures. Okay. So today we'll be covering only the basics, because if I believe that basics are clear, then there will be no problem in solving your problems in your exams. So let's begin. So let's understand what is the foreign exchange market. Fine. So what do we mean by foreign exchange market? So the forex market is a market in which participants can buy, sell, and speculate on currencies. So, which means that there are a lot of participants in the market, and we'll discuss about who are them in my next slide. But they, come to the market to either buy, if you are an importer or you are going to make a payment abroad in a foreign currency. So you go and buy, foreign currency like dollars, euros, Japanese yen, or pounds, whatever you need. You go and buy those currencies in the forex market. If you are basically an exporter or you're receiving money from abroad, so you may like to sell your foreign exchange and convert that money into your home currency. So you go to the forex market and then you exchange and speculate on currencies. Now, some people, they don't have any underlying position either in exports or imports, but they, simply speculate. Either they take long positions in the foreign currency if they believe that the foreign currency is going to, appreciate, and they make money on speculation. And they can even take a short position in a currency if they feel that the currency is going to depreciate, and they make money simply, without having any either export position or an import position in the real business. So there are, a couple of kinds of people, either the people who are really in need of foreign exchange because they are either importer exporters, or they can be mere speculators. So that is, that makes the market, the forex market. Now, I was talking about the participants. Now, who are the participants? The participants are basically, the banks, which are the major players in the forex market, the commercial companies, the MNCs, multinational companies, or companies which require foreign exchange. Either they want to, require foreign currency for their immediate use or for future use, so they will enter into a forward market. Then the central banks, like we have, the Reserve Bank of India in India and Federal Bank in America. So all the central banks, they intervene in these markets for their own purpose, either to stabilize the rates or for even procuring currencies or selling currencies. Then investment management firms, a lot of money pour into India and from abroad in form of foreign currencies. So these firms are very active in the forex markets. Then the hedge funds, which are, basically a more risky investment firms. So they also, since they are investing on behalf of the foreigners, either the money is coming, into their own country or leaving their country. So they need to enter and trade into the forex market. And then finally, the retail forex brokers, basically, who are the middlemen who help us to carry on such trade because we can't directly enter into these markets. So we require the help of a brokerage firm to, procure or buy or sell foreign currency. And then there are investors. Okay, because they have to hedge their portfolio. So, or the investors, they invest like a lot of money is coming nowadays in India in form of FII. So they would like to convert, if the money is coming from say US, so they would like to convert their dollars into Indian rupees and buy Indian stocks or into the Indian debt market. So they also participate into these markets. If you see on your right hand screen, so there are small businesses, commercial banks, the brokers, multinational companies, retailers, and finally the central bank, who constitute the market participants who basically come and trade in these markets. Now we know that most of the countries of the world have their own. Why there is a need of the foreign currency or exchange market? Because we know that there are many currencies in the world. So most of the countries of the world have their own currencies, like the Indian rupee in India, the US dollar in US, the euro in Europe, and the Brazilian real in Brazil, and the Chinese yuan in China. So these are just to name a few. So because there are so many currencies in the world, so we require a forex market to carry on the trade. So the trading happens in these currencies, and that makes the forex exchange market. So now, very important thing which we are going to cover now, because this is part of our basics learning, that what is this forex market? So forex market is made up of two levels: the interbank market and the over-the-counter market. So there are two levels of the market: interbank markets, where only the banks themselves trade, either for their own behalf or for large companies, and the over-the-counter market, where the trade happens for the brokers come into these markets, and individual retail individuals, they come to this market to trade into currencies. So interbank market is where the large banks trade currencies for the purpose such as hedging, and we'll understand what is hedging later on, and balance sheet adjustments, and on behalf of the clients. So interbank market is basically a wholesale market where the transactions happen among the banks themselves, and they either do on their own account or they are doing on behalf of the clients. And then finally, the other section of the market, which is the OTC market, where the individuals trade through online platforms. We have brokerage firms. They provide us online platforms to enter into a trade through for buying and selling currencies. So there's an OTC market and the internet. So OTC market would be where the brokers are involved. So this is a retail segment of the market. Whenever companies or individuals require currencies, so they come to this market. Now let's understand about little about the foreign exchange rates. Now there are two kinds of exchange rates. One is called the spot transaction. This is there are two kinds of transactions, I would say. So one is a spot transaction. So basically, when we require a foreign currency for immediate either payment, or when we are receiving money from abroad, so we'd like to convert that money into the home currency, so we carry on a spot transaction. Spot transaction is an agreement between two parties to buy one currency against selling another currency at an agreed price, which is called the spot price or a settlement price. So most of the spot market transactions have a T+2 settlement date. So whenever the transaction happens, within the 2 days, the delivery and payment happens. So it's called T+2. So this is basically the market where we do a transaction for our immediate requirement of foreign currency. If we require money in terms of, if you are an importer, we have to make a payment to someone. So we will have a spot transaction if we have to make it immediately. And similarly, if we are an exporter or we are receiving money from abroad, so we would like and do a spot transaction for converting that foreign currency into, say, Indian or to the home currency, so that we can have the money in our own currency of the domestic currency. Then we have the forward transaction. Basically, what happens in this forward transaction is that, sometimes we have to make a payment. We get, some kind of a credit term from the importer. So we do the imports now, but make the payment, say, after 2 months, 3 months, or 6 months. So similarly, when we are doing exports, we may not get our, proceeds immediately. So we may get, the foreign currency in terms of, suppose we are exporting to US. So we may get dollars, say, after 2 months or 3 months, depending upon the agreement we have with our client. So in that case, we enter into a forward transaction. The basic purpose of the forward transaction is to book our foreign currency rate in advance, so that we are not exposed to the risk of volatility of the foreign currency rates, which keep changing. So sometimes we may lose, sometimes we may gain. So to avoid that, we entered into a forward transaction, and it's called hedging here. Okay. So forward transaction is an agreement between you and the bank to purchase one currency against selling another currency at a fixed price for a delivery on an agreed date in the future. So basically, the rate is decided today itself, and the delivery and the payment happens on a future date. So now the foreign exchange market exchange rates. So what are these exchange rates? So these exchange rates are published daily in the newspapers and on internet sites such as finance yahoo.com. So we can look for these rates in the newspapers or on the internet sites, and exchange rates for a currency. Now this is very important. The exchange rate for currency such as rupee are quoted in two ways. So let's take an example of US dollar versus rupee. So there's always a two-way quote: US dollar per unit of domestic currency or domestic currency per dollar. So, the second line, which is domestic currency per dollar, would mean that how much $1 would cost an Indian when he's purchasing a dollar. Okay. So, so for example, on 20th of November 2020, $1 was quoted at 73.95. So now this is a relevant quote for us Indians, okay, because we would like to buy a dollar because either we are importing or we are exporting or we are traveling abroad. And the second quote is 1 rupee is equal to dollar so much. Now, this is an indirect quote, and normally we don't see as an Indian, but this quote would be more relevant for the Americans because they would like to understand, how much 1 rupee will cost them, okay, how much dollars they have to pay. So, so we'll understand them. So the first quote, which is $1 is equal to 73.95. This is a direct quote for the Indians, and 1 rupee is equal to a dollar. So many dollars is an indirect quote for Indians, but it will be the reverse if we talk from the American point of view. So 1 rupee is equal to so many dollars will become a direct quote for the American, and indirect quote would be $1 would be equal to 73.95. So we'll understand these direct quotes and indirect quotes, in my coming lecture. So let's begin that. So an American generally would regard the exchange rate with rupee as so many dollars per rupee, or it can be, even for 100 rupees, how many dollars we require. So for an American, this quote would be very relevant. Suppose, he wants to buy Indian rupees because either he's making an imports or he's coming to India. So he would like to convert his dollars into Indian rupees. So he would be more, interested to know this quote. While Indians will think of it as, $1 is equal to 73.56 because we would like to purchase a dollar for either, going abroad, often making a payment abroad or receiving money from abroad. So, so we'll dwell on this more as we go along. So exchange rates are quoted for the spot transaction and for the forward transaction. So which we have discussed already. The forward transaction, the forward exchange rates that will take place 1 month, 3 months, and 6 months in future. So the rates can be, known for, what is the rate of a dollar, say 1 month from now, or 3 months from now, or 2 months from now. So these are called the forward rates, and these rates are always published in the internet sites. So we'll use them while we, attempt some questions which came in our CA exams later on. So how the foreign exchange is traded. So one of the most fascinating thing about the market is that there is no brick and mortar marketplace for forex trading. So there is no big building, where, we say this is the office where all the trading happens. So there is no a brick and mortar place, but it is actually every transaction is done electronically over the counter. Okay. So there is no specific place where the transaction happens. It is all over the world and it happens over the counter. So unlike the stock exchange, the forex market remains open around the clock with currencies traded across every time zone, 5 days every week. So, the trading is happening around the clock, and it is like a stock exchange. It opens at say 9 o'clock and closes at say 3:30 in the evening. It's not like that, but forex markets remain, open round the clock and for 5 days every week. So the forex markets, and one of the very important thing about the forex market is the largest market, financial market in the world, larger than even the stock market. So the daily volume, is almost to the tune of $5 trillion, more than the Indian GDP. So that is the kind of trade which happens per day in the forex market versus, 85 billion for the equities worldwide. A daily, trade which happens for the equities around 85 billion, and for the stock exchange, for the currency, it is 5 trillion. So this is a pretty large market in the world. So now we will enter into the most important part, which is the basic concepts. And there are a lot of basic concepts which are there. And if I believe that you understand the basic concept well, then you will not make any, you will not have any difficulty in solving your questions. So you have to pay a lot of attention in this part of the section, because then the things become very simple going forward. So let's understand, what are direct quotes and indirect quotes. So I'll just open this thing so that I can, if there are any questions, so I can take your. Fine. So let's start with direct and indirect quotes. So here I would like that you should pay a good attention so that you understand these concepts. The students who are very new to this subject, so this is a kind of, even the students who are already, familiar with the subject, so they should, understand these basics, relearn these basics again. Okay. So let's understand about the direct quotes and indirect quotes. So foreign exchange quotation can either be a direct quotation or indirect quotation. Okay. So as we have seen, like $1 is equal to 73 rupees 50 paisa, and 1 rupee is equal to so many dollars. So these are the examples of direct quotation and indirect quotation. So depending upon the home currency of the person concerned. Now, when we talk about direct quotes and indirect quote, it is with relevance to the home currency. So when we say $1 is equal to, like, I'll give an example here. A direct quote is a home currency price of 1 unit of foreign currency. So when we say $1 is equal to 74 rupees, now this is a direct quote for Indians. Okay. But the same quote will become an indirect quote when we are talking with respect to America. Okay. So how do we identify now? For this quote, very easy to understand for everyone because this is an Indian quote. But when we are looking for other quotes, sometimes people get confused. So we must look at the right hand side of the quote. That will carry the home currency. So rupees 74. So which means it's a direct quote for India. So always identify whether it is a direct quote or indirect quote by looking at the right side of the equation here, which says rupees 74. So if it is, pounds, so when we say that it's a direct quote for England, or if it's a dollar, we say it's a direct quote for America. So now you can just see that direct and indirect quotes are reciprocals of each other, which means if we divide 1 divided by 74, then we'll get this quote. And now look at the right hand side, what do you get? Dollars. So that means this is actually a direct quote in America, but for India, it's an indirect quote. Okay, so 1 rupee is equal to so many dollars is an indirect quote for an Indian, people, but it is a direct quote in America. So since we are learning the direct and indirect quotes, so the first quote, $1 is 75, 4 is a direct quote, and $1 is equal to so many dollars is an indirect quote with respect to India. Okay. So direct, the formula is basically the direct quote is equal to 1 divided by indirect quote. Okay. Yeah. Good morning, Charit. Okay. So now let's understand about, little bit more about the direct quotes. Now, direct quotation is when 1 unit of foreign currency is expressed in terms of domestic currency. So if you look at the example on the right hand side, $1 is equal to 74. So which means 1 unit of foreign currency is equal to how many domestic currency. So this is a direct quote for India. Okay. And if we say some more examples, so direct quote, if you're looking for with respect to USA, so in a USA, a person would like to know, how much £1 will cost to him. Suppose he's going to travel to, say, England, or he's going to supposed to make a payment or receive payment from England. So he would like to know what is the price of £1. So price of £1 today is $1.34. So now if you look at the right hand side of the equation, the dollar is there. So this is a direct quote in America for £1. So it's very easy to understand this. Okay. So look at one more quote. €1 is equal to $1.23. Now, whether this is a direct quote of which country? That is a direct quote of America. And they are trying to understand how much €1 is going to cost them. Okay. So look at the right hand side and the currency sign will tell you the home currency. Okay. So the home currency is dollar here. So we say it is a direct quote for knowing what is the price of €1 in terms of dollars. Okay. Fine. So this is a direct quote. So when we look at, the quotes other than India, then we get confused. So the simple way is basically to look at the right hand side of the equation and to understand, the quote belongs to which country. Okay. So the right hand side will tell you the home currency. Now the indirect quote. Okay. Indirect quotation is when 1 unit of domestic currency is expressed in terms of foreign currency, like 1 rupee is equal to so many dollars. Okay. So this is an indirect quotation for India. $1 rupee is equal to how many dollars? Because it is expressed in terms of 1 unit of domestic currency. But the same, quote is a direct quote in America, because if you look at the right hand side, it says dollars. Okay, so this quote is an indirect quote for India and a direct quote for Americans. So now we look at another example, indirect quotation for USA. $1 is equal to how many pounds? Okay, now this is an indirect quote for USA because it is expressed 1 unit of domestic currency in terms of foreign currency, though domestic currency is what? Dollar. So $1 will cost you how many pounds? Okay, so this is an indirect quote in USA for pound, but the same quote will become a direct quote in England, where they would like to know how much $1 would cost to them in terms of pounds. So this is similarly like $1 is how much equal to how many rupees. Okay, so then another example of a direct quote, indirect quote. $1 is equal to so many yuans. Chinese yuan. This is 6.54. So this is an indirect quote for the USA. So and it will become a direct quote for the Chinese people because they would like to buy dollars for making payments. So here we are referring to indirect quote. So on the right hand side we have the Chinese yuan, which is not the US currency. So we know that it's a indirect quote because on the left hand side we have dollar. So this becomes an indirect quote for USA. How do I identify the indirect quote? Look at the right side again. Now the right hand side is not dollar here, but we know that it is talking in terms of how much dollar would be equal to how many yuan. So that means it becomes an indirect quote for USA. Okay, so now direct quotes are reciprocal of each other, which can be used mathematically expressed as follows. So we know that direct quote is equal to 1 divided by indirect quote, or vice versa. And we will be doing a lot of questions. I'll be solving them on the board very shortly. Okay, so and I'll ask you people to also participate in that and give me the answers. So so direct and indirect quote. An indirect quote, the domestic currency is the base currency, while the foreign currency is the quote currency. So here $1 is the quote currency and the base currency is rupees 75. So we always talk about in terms of base currency and the quote currency also. Sometimes it is written. So we must know what is the base currency and what is the quote currency. So an indirect quote is just the opposite. The foreign currency is a base currency, okay, and the domestic currency is the quote currency. Okay, so like 1 rupee is equal to dollar so much. So so the domestic currency becomes the quote currency. So that means it is quoted in terms of rupees. Okay, fine. Now let's understand some questions. Okay, so here I'd like to move on to the board now. Okay, so I'll be solving some questions. So let's understand, first question. These are simple ones. The exercise have been actually, I think, uploaded on your portal, so you can download the exercise. So we are going to do a lot of questions today. So like the question talks about €1. €1 is equal to, I think I'm visible. Okay. So €1 is equal to US dollar 1.2120. So this is what is given. Okay. So this is actually a direct quote in USA. How do we know that? By looking out on the right hand side. Now the question is basically, so I'll actually, okay, I'll stop sharing that. Okay, sorry. Okay. So I think now my board is visible. Okay. Okay. So €1 is equal to so many dollars. Okay, fine. So this is the question, and this is actually the direct quote in USA. Okay, I'll use a different pen. Now the question is basically US dollar 1 is equal to how many euros? Okay, fine. So this is my question. Okay, so we have to answer how many euros will be there in $1. Okay, so this is basically an indirect quote. So we are to converting the direct quote into indirect quote in USA. So a direct quote is given where it is said that 1 euro is equal to how many dollars. Okay. So now we want to know how many euros will be there in $1. Okay. So can you solve it and tell me the answer? So here, if we have to solve it, so what we have to do is we have to do the reciprocal. So it will be 1 divided by 1.2120. Okay, fine. So which means that US dollar 1 will be equal to now this is in euros, so this will be euro, okay? So which can be written as euro 0.8250. So how we are done? By doing the reciprocal. So we know that euro 1 is equal to $2 1.210. Now we want to know how much $1 will be equal to how many euros. So the answer is pretty simple. 1 divided by, so we take 1 divided by 2.20 and we solve it and we get the euro as 0.825. So now I'll ask, I'll give you a question here. Okay. The question is the second question which is coming, which is I'm writing on the board. Okay. So I'll expect you to answer. Okay. Now, pound 1. Okay. Pound 1 is equal to US dollar. I hope the screen is visible to all of you. 1.2617. I'm saying the board is visible. Okay. So that should be very clear. So this is what? This is a direct quote of which country? Quote of USA. How do you know that? We look at this. So this is the direct quote of USA for buying £1. Now we want to convert this into an indirect quote. Okay. So which means how much would be $1 US costing in terms of pounds? So I need to calculate the value of this. So can you answer it? I think a lot of students are there. So I'll give you 10-15 seconds to do it. So you can put your, yeah, very good. I think Chavi, I'm getting your answer. So now others, can you answer it? So what will be the answer for this? This will be, in the meantime, you can just put your answers. So it is 1, we can just do this division. Okay. And this will give us an answer of 0.7926. So now if we write the answer properly, so it will be US dollar 1 is equal to 0.7926 pound. Okay. Fine. So this is how do we write? Okay. Fine. So yeah, I think I've got a lot of answers. Great. Your people are learning. And many of you have already, yeah, great. So, so let's do another question. So now the question is, so now we'll be doing just a couple of questions. It's a simple exercise. Okay. Now the question is New Zealand dollar. Okay. 1. New Zealand dollar 1 is equal to US dollar 0.6562. Okay. So this is a direct quote of USA. So this is a direct quote of USA. Okay. So this is a direct quote of USA. Fine. So now we want to convert this quote into an indirect quote, which means US dollar 1 will be equal to how many New Zealand dollars? So can you solve this? Okay. So I would like to have some answers from you, all of you. So this will be, 1 divided by 0.6562, sorry, which will be equal to 1.5239. So if we write it properly, it will be $1 is equal to New Zealand dollar 1.5239. Okay. Yeah. Chavi, yes, good that you're doing it. And I'm getting a lot of answers. Kostav is also done. And Gomti has also done it correctly. Very good. So some one or two more. Okay. Now we come to this is a simple one, the simplest one. So $1 is equal to rupees 75. Okay, fine. So this is a direct quote of India. Okay, so we want to convert as an indirect quote. So that means we want to write 1 rupee is equal to how many dollars? Fine. So can you do it? So this will be basically, yeah. So please answer. So we will do 1 divided by 75. Okay. And then the answer would be 0.0133. Okay. So which means 1 rupee is equal to $0.0133. Okay. Fine. So I hope you are understanding. It's a simple game. So so let's do one more question, which I'll ask everyone. Sorry, okay, no questions now. So let's talk about yet another concept. Okay. So I'll be talking about another concept. Okay. So I'll be sharing my slide now. Okay. So okay. So let's move on to yet another concept. Okay, which is called American terms and European terms. Now, this is a very, very important concept, and you will be able to solve almost 50% of your questions if you know this concept well. Okay, so I'm getting a lot of answers. Very good, Diksha, Ambika, and Gomti. You're all answering well. So let's go back now to another a very basic concept. Okay, so today we will be doing all very simple but very basic concepts, and they will help you to sail through all your questions in your exams if you understand them. So today we learned first direct quote, indirect quote, which was very simple. Most of you are able to answer it. So let's go to the second concept, which is again a very simple concept, but it helps you to solve very, very difficult questions. So please focus and listen. Now, the quotes can be expressed in terms of American terms or European terms. Okay. So currency pairs versus US dollar tend to be quoted in one of the two ways in either American or European terms. So here basically we are saying that with reference to dollar, okay, so dollar has to be one currency. So currency pairs versus US dollars can be quoted in one way or two ways. Either it can be American term or European term. Okay, so let's understand what they are. So let's look at this thing. Now, like suppose 1 rupee is equal to so many dollars, and we know that this is basically an indirect quote for Indians, and it's a direct quote for Americans. Okay, fine. 1 euro is equal to so many dollars. Now, again, this is basically a direct quote for euro, and it's a direct quote as we know. And now, if you look at this, this is a direct quote in United States. Okay, if the quote is given like 1 rupee is equal to so many dollars, or 1 euro is equal to so many dollars, so this is a direct quote in United States, because they would like to purchase either rupee or euro, or it can be even for pounds or for yens. But I've just given you 2 examples. On the right hand side, there'll be always dollar. If that is the case, then we say that it's written in American terms. So this quote will be always a direct quote in USA, but this will be an indirect quote outside USA. Suppose if the quote comes $1 is equal to 1 rupee is equal to so many dollars, so we say that it's written in American terms. Or 1 pound is equal to so many dollars, we say that it's written in American terms. But if it is written like this, that 1 rupee is equal to 75, which is a direct quote in India, but an indirect quote, in America. So this is a direct quote outside United States, but an indirect quote in United States. So if the currency is written in this form, we say that it is written in European terms. Okay, so $1 is equal to 75. This is written in European terms. $1 is equal to so many euros. It is European terms. $1 is equal to so many pounds. Okay, so always it will be a direct quote outside United States. Okay, but this will be called European terms. So the quotes can be either expressed in American terms or European terms. I just repeat that again. So if the quote is a direct quote of a dollar in United States, so it's an American term. Okay, it's a direct quote in United States only, then it will be called American terms. But if it is a direct quote outside United States, but an indirect quote in America, then it will be called European terms. So we'll understand this more deeply as we solve problems. Okay, fine. So let's move to yet another, a basic concept: bid, offer, and spread. And I'll be doing some questions on the American terms and European terms as we go along. Okay, so it will be coming very shortly. So let's talk about a bid, offer, and spread. So what's this? Foreign exchange quotes are two-way quotes expressed as a bid and ask rates. So there will be 2 quotes which will be given to you by a broker or by the bank. One will be a bid and another will be ask. So bid is a price at which the bank or the dealer is willing to buy another currency. Suppose he can buy your currency from you. So if you are an exporter, so you'll go to the bank and say, this is my dollar, give me a price. So he'll give you a bid rate for that. Okay. Then the ask or the offer is a rate at which dealer or bank is willing to sell another currency. Okay. So suppose if you are, have to make a payment to your importer. So you will go and look at the ask rate. Okay. Or the rate at which the dealer would sell the money to you. Okay. Suppose if you are an importer and you need dollars, so you will always look at the offer rate or the ask rate. But if you want to buy, the currency, then you will look at the ask rate. Okay, fine. So we'll explain that more in detail. Okay. So bid means buy. So this is basically the buy rate for the bank. Okay. So bid is basically at what rate the bank buys from you. Okay. And ask is the rate at which the bank sells the currency to you. Okay. So I'll just re-clarify here the bid and offer spread. So the foreign exchange are always given in two-way quotes. One is a bid and ask. So bid is the price at which the bank is willing to buy the currency. Okay. So that means at what price he's going to buy. Okay. And ask is at which price he's going to sell the currency. Fine. From the customer perspective, it will be just the opposite. So bid becomes the buying price of the bank, but your selling price. And similarly, the ask price becomes the price at which the bank is selling to you and you are buying from the bank. Okay, so we'll do some questions so that you get clarity of that. So bid price is the bank's buy price. Okay, and ask price is the bank's sell price, or we can say even the dealer's sell price. So dealers or banks buy price is the bid price, and ask is the dealers or the bank's sell price. So let's understand some. Will these slides be available in the? Yeah, I will be passing on these slides to the ICAI, and you can download these slides. So these slides will be after the day is over. I'll be handing over these slides to you. So don't worry about Diksha. So for example, a dealer may quote Indian rupees as 75.80 dash 75.90. So that means so here, $1 is equal to 75.80, which is the bid price, and 75.90, which is the ask price. So dealer will give you two-way quote. So he'll say 75.80 and 75.90. So that means 75.80 is his buy price or the bid price, and 75.90 is his selling price. That means the price at which he wants to sell, or it's called the ask price. So if, as a customer, if you go to the bank and you have to, buy dollars, so you have to pay 75.90. So that becomes your buying price. Okay, it's a bank selling price, but your buying price. Okay, so this means that he's willing to buy dollars at 75.80 per dollar, while he will sell dollars at 75.90. Okay, so which means these are the two-way quotes which are given. One is the buy price of the dealer or the bank, another is the sell price. Okay. So the difference between the bid and offer is called the spread. Okay. So here the spread is 10 paisa. So shorter the spread, better it is. Okay. Because if the currency is dealt and has a great liquidity, then the spreads become smaller. But if the currency is not being traded so often, the spread will become larger. Okay. Like suppose if you want to buy $1, then the spread will be very small because the dollar is a widely, a currency, a big currency which is being traded quite often. But if suppose you are looking for a New Zealand quote, in terms of Indian rupees, you will find the spread becoming larger because very less transactions happen in such currencies. I mean, New Zealand is again a big country, or people go up there, but we may refer to a very small country. The spread will become quite large. So the offer ask is always higher than the bid. Okay. So this is a very important, concept. The bid is the ask price is always higher and the bid is always smaller. Okay. Because the dealers make money by buying at a bid and selling at the offer price. Suppose, here example, $1 is equal to 75.80. So this is the buying price of the dealer or the bank. So he's buying at 75.80 from you, but he's selling at 75.90. Okay. So they make money because of this spread. Okay. So if you want to buy currency, you have to pay the higher ask price. But if you want to sell the currency, you have to sell it at a lower bid price. Okay. Fine. So this is the bid will be always lower and ask will be always higher, because you have to pay more money for buying your currency. Okay. So if you were to buy the currency and immediately sell it back to the same dealer, the dealer would make money and you would lose money. So dealer in this case will be, making money because he's buying at 75.80 but selling you at 75.90. So you bought at 75.90 and sold it at 75.80. So you made a loss of 10 paisa and the dealer makes money. So thus the spread is a transaction cost of the trading currency. So the spread is called the transaction cost for the trading currency for the customer. Like suppose you bought it at 75.90 and you sold it at 75.80. So you made a cost of 10 paisa by doing this trade. Okay. So now there's a question which will be there. Okay. There's an example here. So I'll be asking you people to tell me, and you will understand the concept about bid and offer by looking at this example. So George is an American businessman visiting Europe. So this is an American guy who is going to Europe. The cost of purchasing euros at the airport is as follows. Suppose it is written that €1 is equal to USD 1.20 slash USD 1.30. So the bid and ask prices are given to you. So here the bid is 1.20 and ask is 1.30. Now the question is, George wants to buy euros, 10,000 euros. So he's an American businessman. So he's going to, Europe. So he landed at the airport and he saw this quotation. So now tell me how many dollars he has to give to the dealer to buy 10,000 euros. Please put your answers on the chat line. So here, this is an American businessman who is going to Europe, and he sees this rate at the airport, that €1, because he needs euros, because he's going to Europe. So he'll like to find out, what is the price of €1 in terms of dollars, because he has dollars in his pocket. So he like to convert the dollars into euros, because he'll land up in Europe, and there the dollar will not be acceptable. So he has to make the payment in euros. So he goes to the bank and he says that I want 10,000 euros. So the dealer will ask for how many dollars from him. Okay, the answer is pretty simple. So here, the higher price, which is USD 1.30, is the cost to buy each euro. So he would have to pay the dealer the ask price, which is $10,000 multiplied by 1.30. So if you have to buy dollars, then you look at the ask price, because this is the dealer's buy price. This is the dealer's sell price, okay? And your buy price, okay? So dealer is willing to sell you at 1.30 and you will buy at 1.3. And similarly, 1.2 is actually the dealer's buy price and your. Suppose you come back from, say, this American gentleman is coming back from, say, from Europe, and he has got, say, $1,000 with him left. 1,000 euros left. 1,000 euros are in his pocket now. He'd like to convert those euros back into US currency. So he will get how much? 1,000 multiplied by 1.2. So that means he'll get $1,200 dollars back. Okay, for converting 1,000 euros. Suppose he's returning back from Europe. He took $10,000. Okay, yeah. So okay, so I think Ambika, you need to check your answer. The answer is 13,000, because 13,000. Why? I'll just explain. Some people get confused in that. So first, look at the first point. The American business is visiting Europe. So he has dollars in his pocket. Okay, he needs euros. So he looks at the rate at the airport. He finds that the dollar will cost him 1.30, because this is the price at which the bank is willing to sell to you. Okay, because this is their ask price. So you have to pay $1.3 per euro, and you need 10,000 euros. So 10,000 multiplied by 1.3 will make $13,000. So this American gentleman has to pay $13,000 to get 10,000 euros. So he will always look at 1.3 quote, which is the ask quote. While you purchase the foreign currency, you have to pay always more. But when you come back and return your currency, you will find that you are getting lower money. So the bid is always lower and ask is always higher. So if you have to purchase, then you will find that you have to shell out more money. And in your exam, suppose the quote is given in a reverse fashion. So you have to again set it right. The bid is always smaller than the ask. Sometimes to confuse, they may give you in question just the opposite way. So you have to always remember the bid is always small, ask is always large. So first set the quote in right order. So here the quote is already in an order. So I hope you have understood. Okay. Very good. So let's go now and understand. Now let's understand some more rules. Now this is a very, 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 very important rule. Okay. So please pay your utmost attention to this rule. The rule is bid price indirect is equal to 1 upon ask direct. Now look at the right hand side here of the quote. Suppose you want to convert a direct quote into an indirect quote. Okay. Suppose if you want to convert a direct quote into an indirect quote, okay, then do the reciprocal of the ask and you will get the bid price in the indirect quote. So I'll tell you what's the reason and what's the logic very shortly. So the ask price indirect is nothing but equal to 1 divided by bid price direct. So if you want to convert a direct quote into an indirect quote and a two-way quote is given to you, use this formula. Okay. So if you want to convert a direct quote into indirect quote, this is the formula which is given you on your screen. And what is the logic? I'll just shortly tell you. So first, let's understand an example. Suppose $1 is equal to 75 rupees / 76. So we know that 75 is the bid price and 76 is the ask price. Okay. So always remember the bid price is always smaller than the ask price. So 76 price is the price at which the bank is willing to sell his dollar, and 75 rupees is which he would be buying the dollar from you. So this is a direct quote for dollar in India. We all know that this is a direct quote for dollar in India. Now we want to convert the direct quote into indirect quote. So how will we be doing that? Now I'm telling you that this is the important concept, and you will be needing this concept all the time to solve almost like 90% of your question in your exams. Okay. Of course, you can understand the logic, but then you can mechanically convert all these quotes from direct to indirect quotes whenever required. So what will be the bid price? Bid price will be 1 rupee will be equal to $1 divided by 76. So if I'm converting from a direct quote to an indirect quote, so I am now talking about in respect of how much 1 rupee will be equal to how many dollars. And the ask price will be rupees $1 divided by 75. So now we are just, reciprocating and interchanging the quotes. Okay. So the bid and ask will go a change. Now, we know that the formula is, written on your screen, that bid price indirect is nothing is equal to 1 upon ask price direct. So here, what I've done is this 76, I brought it here as a bid, okay, and we are divided by 1, so I get a bid here, okay, fine. So this is the formula has been just replicated here, and now why it is so? Because selling a dollar is like buying rupees. So if you are selling dollar, now what is your selling dollar? Now this is the buying price of the dollar, and this is the selling price of the dollar. Okay, so this is at the price at which the bank is going to buy from you, and this is the price at which the bank is going to sell to you. Okay, so the selling a dollar. Suppose if you are selling a dollar, it is nothing but buying rupees. So that means if you are selling a dollar, which means buying rupee. So this is coming here. Okay, selling dollar is like buying rupees, because when you go and sell the dollar, so you're converting your money into rupees. Okay, so you're buying rupees. So that means the quote will go a change here. So this selling will become a buying here in terms of rupees. Okay, fine. And similarly, buying dollar is like selling rupees. So if you're buying dollars, a bank is buying dollars, that means it is selling rupees. Suppose you, suppose you go to the bank with the dollar and you want to, sell your dollars. Okay, so the bank is buying from you, but what their bank is receiving, he is receiving rupees from you. Okay, so this is the logic behind it. So this is the quote. So the bid price, the bid for the trader is always lower than the ask price. So we know that, we have been discussing that. So that means this will be the quote now. I have converted the quote from direct to indirect quote. Okay. So 1 rupee will become $0.01315 dash $0.01333. So now look at this again, the quote. So bid is lower. It is 15. Look at the last 2 digits. It is 15 and it is 33. So which is higher? This is higher. So the bid is always lower than the ask. So the parity is maintained whenever you convert a quote from direct to indirect quote. You will find that you have got again, back to the same, this thing that bid will be always lower. So I'll just, take you back again, because this is a very important concept. So look at this, rule. Bid price indirect is equal to 1 upon ask price direct. Okay. And ask price indirect is equal to 1 upon bid price direct. So a quote will be given to you. For example, quote is given to you like this: $1 is equal to 75.76. Okay. So 75 is the bid price and 76 is the ask price. So this is a direct quote for dollar in India. So now I want to convert, into direct into indirect quote. So now I want to know how much 1 rupee is going to cost in terms of dollars. So I want both bid and ask price now given to me. So what I'll do to calculate the bid price, I'll take the ask price of the first quote, which is direct quote, and reciprocate and do the reciprocal of that. So 1 rupee will equal to 1 divided by 76. And similarly, for the ask, I'll be taking the 75 rupees, which is the bid price, and I'll be doing the reciprocal of that. So that will become the ask price, and the bid will become the ask will become the bid price, and the bid will become the ask price. Why? Because when you're selling dollar, it is nothing but you're buying dollars. But when you're buying rupee, you're selling dollars. So the logic is that way. So selling dollar is like buying rupees, and buying dollar is like selling rupees. So the logic fits into this equation. Okay. So and always remember, after you have converted a quote from direct to indirect quote, check the bid price is always lower than the ask price. So if you do that check here, you will find 1 rupee is equal to $0.01315, which is lower. So bid is lower, ask is higher. Now we have converted a quote from direct to indirect. Okay. So now you do it yourself. Okay. Fine. So I'll give you some questions. I'll give you some examples. So now this is given to you. Okay. $1 is equal to so many pounds. So this is basically a direct quote of England. Okay. In terms of dollars. So now we want to know how much 1 pound will cost. So we want to convert this, a direct quote in England to indirect quote. So tell me what will be the price of 1 pound in terms of dollars? Okay. So this is basically a direct quote in USA we are converting it to, or we can say it's an indirect quote in pounds in England we want to. So tell me what will be the price of 1 pound will be equal to how many dollars? So please solve it and let me know the answer. In this question, what is given? The question is given that $1 will cost you how many in terms of pounds? Both bid and ask price is given to you. Now you have to convert this quote from say the quote which is given to you. Now you have to find in terms of how many 1 pound will cost you how many dollars. Okay. So if we have to look at what is direct and indirect quote. Now the first quote is basically a direct quote in England but indirect quote in USA. Okay. And now we want to convert that into a direct quote in England. This is a direct quote in USA. Okay, we look at the right hand side, so we find dollars. So this is a direct quote in USA. How much 1 pound will cost in USA? Okay, in terms of dollars, or we can say it's an indirect quote in England. Okay, so please give your answers. So this is, I'm just putting the questions, the answers also, so that you can just solve it and put it on a chat line. So 1 pound will be nothing but it will become 1 divided by 0.7574. So the ask will come on the bid side and the bid will go to the ask side. Okay. So 1 pound will be the reciprocal of 1 divided by 0.7574. And the ask will be 1 divided by 0.7545. So very good. Yeah, I think I'm getting some answers now. So the answer is on your screen. So Kostab has already answered. 1 pound is equal to 1.3203. Yeah, absolutely. So I think you have got it. And if you have any questions, you can pose those questions now. So I'll be, giving one more question. Okay, fine. So you do it. So 1 euro is equal to so many dollars. Now we want to calculate how many euros will cost you $1. Okay. So we want to convert this quote in terms of euros, where it was given in terms of dollars earlier. So the first quote is a direct quote in USA, and now we are converting an indirect quote in USA. That means how much $1 will give you in terms of euros. So please answer this question. So then we will go further. Very good. I think most of you have got it. Yeah. Pujita has done it. Okay. Very good. Gomti is done. Sumit Jain is also doing it. Preeti, you have done it. Very good. Chavi has already done it. The first one to do it. Okay. So please do this now. So here in this question, it is given that 1 euro is equal to so many dollars. Now you have to convert this from a direct quote in USA to an indirect quote in USA by telling how much $1 will cost you in terms of euros. Okay, fine. So the answer is again the same. By doing the reversal of the bid will go to the ask side and ask will go to the bid side, and we will do the reciprocal of it, and we will get the answer. So I think you can just put your answers in the chat box if you have done it. Yeah. Sorry. Yeah, Shavi has done it. 8.8230. Very good. Yeah, I'm getting a lot of answers from you. Yeah, definitely. I think you people are getting it right. And this looks very simple, but this confuses the people the most in the exams. So please, understand this concept very well. How to convert a direct quote into indirect quote, or indirect quote into a direct quote. The formula is very easy, and the logic I have already told you. Okay. So now this is yet another very important concept. Understanding the FX, the forex quote conventions. Now this is again one of the very, very confusing thing which happens in the exams, and how they're given, the quotes are given. So let's understand what are the conventions, how the quotes are presented to the people and presented to you in your exams. Okay, fine. Now we refer $1 is equal to 75 rupees. Okay, we know that $1, if the quote is given $1 is equal to 75, now this will be written as rupee/dollar quote. Okay, which means on the right hand side, the rupees given will come first and the dollar will come second. So if it is written in exam that this is a rupee/dollar quote, then it would mean how many $1 will cost you in terms of rupees. Though it looks very simple when it is given in Indian rupees, and we can understand that, but when it comes to the foreign currency, so this confuses the people a lot. So this is the normal way of writing a quote. Rupee/dollar quote will be written as $1 is equal to 75. Now let's look at another quote. Thus, a $pound quote is written as £1 is equal to, so suppose it is given that $/pound, so which will mean £1 is equal to how many dollars? Again, giving the first logic where it was rupee dollar, so it was $1 is equal to how many rupees? Okay, so a rupee/dollar would be meaning how much $1 is equal to how many rupees. Similarly, $pound will be how much $1 will cost you in terms of £1 will give you how many dollars. Okay, so and we know that £1 today, this is the current quotation, £1 is equal to $1.32. So far so very good. If it's written like this, there is no problem. You can always do that. But let's understand here. Again, £1 is equal to $1.21 is expressed like this. Okay. Sometimes they can write $/pound equal to 1.21, which will mean how much 1 euros are going to cost you in terms of dollars. Okay, fine. So now let's talk about the reverse notation. Okay, so far we have understood which is the normal way. Okay, if a problem carries a reverse notation, it becomes a challenge to solve it. So most of the students, make mistakes because, the quotation is not given in the order, in the normal order, which I have already explained. Okay. Since we are used to or familiar with a normal quotation, we are tuned to look at the normal quotation. But when it is the other way around, we are confused. Okay. So to overcome this problem, we know through journal knowledge how many units of one currency should cost of another currency. So to overcome this problem, if we know through journal knowledge how many units of one currency should be another currency. Now I'll explain that. What is the journal knowledge? Okay. And it's a very simple one, and you'll understand that. For example, if it is given dollar rupee quote as $1 is equal to rupees 75, okay, we know that this is a reverse notation because it is written dollar rupee as 75. Okay, so this is a reverse notation because we know that it should have been written as rupee dollar. Okay, but it is written the reverse way. Okay, but if it is written as 75, we know that $1 is equal to 75, so we can immediately put it as $1 is, and we know that it's a reverse notation because we are tuned to how many dollars will come in 1 rupee or how many dollars will cost you in terms of rupees. Even if it is written reverse way, we can simply put it in the right way because of our general knowledge. Okay. Similarly, if it is given, now here the problem comes. Suppose it is given that euro oblique dollar 1.21. Is it a reverse notation? It is a reverse notation. Now this is a reverse notation because to our general knowledge, we know that 1 euro is equal to $1.21. Now, how do we know that? Because 1 euro is equal to, in 1 euro, you will get more dollars. Okay. Because $1 in India costs you, say, 75 rupees. Okay. But 1 euro is close to about 90 rupees. So that's the general knowledge because euro is costlier than dollar because the dollar costs you 75 bucks and euro costs you 90. Okay. So in 1 euro, you will have more dollars, isn't it? And not that $1 is equal to, 1.21 euros. Because if we follow this convention, the normal convention, so we will, express this as $1 is equal to so many euros. But this is the wrong, because in $1, you can't get more euros. In 1 euro, you get more dollars. Because euro is, when you look from the Indian currency point of view, euro is costlier than dollar. So if you have 1 euro, you will get more dollars. Okay. So this is the general knowledge. So you must have some knowledge. If you know, how much 1 euro cost in Indian rupees, how much $1 cost in Indian rupees, or how much 1 pound cost in Indian rupees, you will never make a mistake. So at least look at the rates which are currently trading in this thing. So I will now ask you to go to the Google and look at the rate of 1 euro. 1 euro. So just go to the Google and say 1 euro is equal to how many dollars? So do that on the Google. How many dollars? So you will get the answer. Okay, 1 euro is equal to how many dollars? Okay. So 1 euro. 1 euro is equal to 1.22 United States dollars. Are you getting it? If you just go to the Google and find out how many euros will give you how many, 1 euro will give you how many dollars. So you will find that it is, 1 euro will give you $1.22. So, and not, it is written other way, right? Like $1 is equal to how many euros. So this is just to confuse you. Okay, so while we doing some question, I'll let you know when we face this problem. Okay, fine. So let's do some example. Now, given Japanese yen oblique dollar as 0.0096. So what this means, I'll do first example myself. Second example, I will leave you to solve it. So is it a normal or a reverse quotation? So as per this, the normal quotation would be $1 is equal to 0.0096 yen. And we know that in $1 you get almost like 100 yens, because yen is a very small currency. Okay, it's almost like 70 paisa. 1 rupee is equal to 0.7 yen. So that means it's a reverse quotation. So that means it should be written as 1 yen is equal to $0.0096. So this is not a normal quotation. So if it is written yen upon dollar, so normally it would mean $1 is equal to so many yen. But here it is the other way around. So 1 yen is equal to so many dollars. So now you can just go to the Google and look for what will be the price of 1 yen in terms of dollars, and you will find you will get very near to this answer. So sometimes it may be just to confuse you, and always remember that yen in terms of dollars would be very large. So $1 will give you almost like 117 yens. So so this quotation is not right. So that means here we're talking about this in dollar terms. So 1 yen is equal to so many dollars. So a little bit of general knowledge and a little bit about knowing about how much yen, but just try to know the price of yen, dollar, euro, pound, Singapore dollar in terms of Indian rupees. If you know that, then I think the task will become easy for you to understand whether the quote is a normal one or a reverse one. So I'll give you one question here, okay? So which I'll leave it on you to solve it, so that this settles in your mind. So given Singapore dollar oblique dollar as 0.75, is it a normal or a reverse quote? So normal would mean $1 is equal to 0.75 Singapore, okay? And a reverse would mean 1 Singapore is equal to $0.75. So which is the right one? Give me the answer. I'll just wait for the answer, because this is the important aspect of our learning. So if it is given that Singapore dollar oblique US dollar as 0.75, Singapore dollar oblique US dollar as 0.75, tell me whether it's a normal quote or a reverse quote. First question is this, okay? Second is, how do we express this in terms of, $1 is equal to how many Singapore, or 1 Singapore is equal to how many dollars? So just put it in the right way. So I'll expect you to answer this question. So I'm just waiting for your answers on the chat lines. I'll give you 1 minute more to solve it, okay? And then I'll start putting the answer on the board, on the slide itself, and then we'll do some questions on the board later on. Okay, so give you some more time to solve it. So if you have any doubts, you can go to the Google and look for the price of Singapore dollar in terms of US dollars, or in terms of US dollar in terms of, you may look for the dollar price in terms of Singapore dollars. So just find out and you will know what it means. So a little bit about knowledge about the currency. Current currency rate is very important, but you can't know all the currency rates. It's a tough thing. And in your exam, sometimes the rates are given very old and it becomes confusing. So the best way is basically to know that, the dollar in terms of India is the cheapest. Of course, Singapore dollar will be much cheaper. It's close to about 50 rupees. Okay. Then comes the American dollar. First is Singapore dollar, then the American dollar. Of course, there are Australian dollar and New Zealand dollar also. They are also much lower than the US dollar. So Singapore dollar, Australian dollar, and New Zealand dollar around 45 to 55 rupees, and the American dollar is close to about 75. The euro is about 90, and pound is close to about 100. Yen is a currency which will be in almost like 1 rupee is equal to 70 yen, 0.70 yen. So just remember these couple of currencies in Indian term, and you will never make a mistake. Okay. So now we know that it's a reverse code. So $1 is not equal to 0.75 Singapore dollar, but 1 Singapore dollar is equal to 0.75, because you know that Singapore dollar will cost you around 50 rupees. So in 1 Singapore dollar, you will get less than dollars, less than a full dollar. So 1 Singapore dollar is, So I think some of the people are giving a normal quotation. Some people are giving reverse. So Sumit, you're right. And Ambika, you're also right. And Chavi, you're doing a good job, right? Kostap is right. Sumit Jain is right. Hiten is also saying it's a reverse. I think you have got it. I think you have got it. So this was my purpose basically. And if you have, I'll give these slides to the institute so that they can be related back to you, so they can go through. So let's move on to another thing. So let's do some questions. Okay. So I'll be moving on to the board again. So I'll be stopping my screen here. So let's do the questions. The questions have been already, forwarded to you, but I'll be writing some part of the question back on the screen. Okay. So let me just check whether you are able to see me, see the board. Yeah, the board is quite visible. So this is exercise 5. If we have not downloaded the assignment to this thing, you can just download and see. So we are doing exercise number 5. So I'm just writing the question for your reference if you don't have it. So if 1 Canadian dollar is equal to $0.07703. So that means 1 Canadian dollar is equal to $0.7703. Now, of course, it is written in full form, so there is no question of reverse or normal. So this is given you, as it is. So the question is now, find how many dollars we get by selling Canadian dollars 10,000. Okay, so this is the question. Fine. So what we are given, 1 Canadian dollar is equal to $0.07703. Okay, fine. Find how many dollars we get by selling 10,000 Canadian dollars. Now it's pretty simple, because 1 Canadian dollar is so many dollars, US dollars. So we just, look 10,000 multiplied by 0.0773 here. So if one costs this much, 10,000 will be simply multiplication of 10,000 to this. Okay. So this is very simple. Okay. So we can just solve it because, we are given the quote in Canadian dollar terms, and we want to find, we are, selling these. So this is, the Canadian dollar buying and selling rate of dollar. So we can just simply multiply by that and get the answer. So we have to sell Canadian dollars. We need Canadian dollar quote. Since we have it, so we will use it directly. Okay. So this will give you $7703. Okay. So this is pretty simple to start with. We start with a very simple question and then move on to a little bit tougher ones. So a couple of them are very simple. So I would now ask you to solve yourself. Okay. One more question. Okay. So we move on to the exercise number 6 now. Okay. The question is, if 1 Japanese yen is equal to $0.0093. Okay, fine. Find how many dollars we get by selling yen 20 lakhs. So how many dollars we'll get? So the question is, if 1 yen is equal to $0.0093, suppose I want to sell yen 20 lakhs. So how many dollars we will get? Now, this is a yen buying or selling rate, okay, depending upon whether it's a bid rate or ask rate. So basically, we want to sell Japanese yen. So this becomes a bid rate, basically. Okay. So I want to sell 20 lakh yen. So this is the rate I look at how much 1 yen will cost you. Okay. So what should be the answer? Okay. So here it will be, I think I've got the answer for someone. So it is basically, again, 1 yen is equal to how many dollars? So 20 lakh yen will be 20 lakh multiplied by dollar 0.093. So which gives you dollar 18,600. So I think some of you have already done. Shavi has done, Ambika has done. Very good. So this is the answer. Okay. So let's move on to one more simple one, and then we move on to the little bit difficult ones. Yeah. So let's do a little bit. This one is a little tricky. Okay. So $1 is equal to 0.94 Swiss franc. Okay. So it is given that $1 is equal to 0.94 Swiss francs. So how many dollars we get by selling 50,000 Swiss francs? Okay. So $1 is equal to 0.94 Swiss francs. So how many dollars we get by selling? This is by selling 50,000 Swiss francs. Now, in this case, the quote is in dollars, but we want to sell Swiss francs. So the best way would be to first convert this quote. So 1 Swiss franc is equal to 1 divided by 0.94. And this will be in dollar terms. Okay. So 1 Swiss franc will give you so many dollars. Okay, fine. So we can just solve it. 1 divided by 0.94. So we get 1.0638 dollars. Okay, fine. So now we can just simply multiply 1.06382 into 50,000. Okay. So because now we want, how much one Swiss franc should cost, how many dollars. So we have 50,000 Singapore Swiss francs. So we'll multiply. We have to first calculate in terms of Swiss francs. Okay. So then we just simply can multiply and calculate the answer. So this will give you an answer of $53,191. Okay. One way would be just take 50,000 Swiss francs and divide simply by 0.94, which will also give you the same answer. Okay. So this is also giving you can just divide and calculate and multiply, or you can take 50,000 and divide by 0.94. Okay. So this is simply, we are just cutting short, and this is always a recommended way of doing it. Okay. But this is to understand the concept, why we are doing it. So have you followed? Yes. Yeah. Gomti, it was 53,191. Okay. No problems. You made some mistake in calculating it. Okay. So now let's do one more question. Okay. Do it yourself. No, I won't do it. I'll just put the question on the board and I'll ask you to do and then give the answer later. One Singapore dollar is equal to rupees 54.13. Okay. Find how many Singapore dollars we get by selling 5 lakh rupees. Okay, fine. So please solve it. By selling 5 lakh rupees. Now look at the quote. The quote is not in order. So first you have to set the quote in order and then simply solve it. Okay, so that's a cue. So please do it. Good. Pujita, you are following it. Very good. That was my purpose. If you're following that, that's great. So please now solve this question. Okay. So 1 Singapore dollar is equal to rupees 54.13. How many Singapore dollar we get by selling 5 lakh rupees? So this is the question. Okay. Please put your answers on the screen. Here again, I told you that this quote is in Singapore dollars and we have 5 lakh rupees. So first convert this into 1 rupee is equal to, Singapore dollar 1 divided by 54.13. Okay, fine. Then you just simply multiply this 5 lakh multiply 1 divided by 54.13 and you will get what answer? So yeah, 9,000. Very good. So the answer is, I think most of you have done a right answer. So this will be in Singapore dollar. Okay. 9237 is the right answer. So you people have done it right. It's great. So let's see if there is any other question. Yeah. So another question, I'm just putting it. So if $1 is equal to rupees, now this is a little, because in your exams you may get a quote which will be a little bit older ones. Okay. So so be prepared for that. Rupees 68.61. Okay. But today we know that it's close to about 73 bucks. So find how many dollars. So find how many dollars, US dollars, we get by selling rupees 25,000. Okay. Fine. So please answer this. So I'll just wait for your responses for a while. So here you want to sell Indian rupees, but the quote is in dollar terms. So we have to calculate 1 rupee is equal to $1 divided by 68.61. Fine. So now 1 rupee is equal to so many dollars. So 25,000 rupees is equal to 25,000 multiplied by 1 divided by 68.61, and this will be in dollar. Answer will come in dollars. Okay. So this will give you how many dollars? Yes, $364.38. Yes, I think a lot of people have done. Yeah, wonderful. I think I'm getting all the right answers. Great. So I think it's a great learning so far. Questions were easy. Okay. So another question before we come to the next concept. Last question. Okay. And then we move on to yet another concept. So 1 pound, I'll just write it properly. 1 pound is equal to rupees 86.34. Now it's very close to 100 now, okay? But the time we prepared this question, it was 86.3. Find how many pounds we get by selling rupees 25,000. Okay, so do this. Just put the answers. So basically here the quote is in pounds, okay, and we have rupees, so we can just simply, after when we know the question, and we can simply, divide it by 86.34 and solve it. Okay, fine. So it comes to about 289.55 pounds. Okay. So very good. I think most of you have done it. Okay. Okay. So there's one small more question. So I think we will be just completing that and then moving on further. So one more small exercise, a little bit in the similar order. €1. So remember, why I'm saying is because €1 is rupees 77.44. In the morning when I checked, €1 was costing you close to about 90 rupees. So that is the quote, because the prices keep changing, but relatively the prices remain same. The dollar, then we have the euro, and then the pound in terms of the costliness in terms of rupees. Okay. So how many euros we get by selling rupees 25,000. Okay. So please solve, and then we'll move on to a little bit difficult ones. Okay. We'll do some more concept and then move on to the difficult ones. So please solve it. So here, basically, it will be 25,000 divided by 77.44. Okay. So which will give you the answer as euros 322.83. So in 25,000 rupees, you have euros 322.83 euros. Okay. Okay, I think you people are doing it for us. Okay, so now we will, understand some more this thing, and then we'll have a break after a few minutes. Okay, so just one more thing, and then we will move on to the breaks. Okay. we'll have a break. Okay, so now we are going to the cross trades. Okay, so this is also a very, very important concept. Okay, so let's do one thing. We'll have a small break, okay, for 5 minutes, and then we meet again. Okay, so a 5 minutes break is there. I'll come back to you after 5 minutes. Okay. one of the very, very important concepts which we'll be learning today. And now, here we will have used the knowledge of the American courts and European courts, which we learned in the morning. So I'll explain a little bit again about the European and American courts, so just to refresh your minds. And but we'll do it while we learn what are cross rates. Okay. So exchange rates expressed by any currency pair that does not involve US dollar are called cross rates. Now the exchange rate, please pay focus here. The exchange rates expressed by any currency pair that does not involve US dollar are called cross rates. Now examples of cross rates are 1 pound is equal to so many rupees. Now this doesn't involve any dollar. Okay, so this is the cross rate. Okay, fine. Another example, 1 euro is equal to 90.55. This is also a cross rate because this is not a rate which is involving dollars. And why it is called cross rates, I'll just come to you shortly. Now, these are the current quotes, okay, just about a day before. So 1 pound today is very close to 100 bucks, okay, and 1 euro is 90. So you must remember these current quotes a little bit, okay. But in exams, sometimes old quotes are given. So, but you can just learn that always euro is cheaper than pound in terms of Indian rupees, okay. And similarly, when you look at 1 yen, it is even less than 1 rupee, okay. So must remember that this is the prevailing way that the things are happening, okay. And it hardly changes significantly in terms of relativeness of the quote, okay, fine. So if the 1 pound is say 90, then 1 euro would become close to about 80 rupees. It will be like this. So relatively, the pound will be costlier compared to the euro. And 1 euro is equal to 0.91 pound. Now this is again a cross rate because it doesn't involve any dollar sign. Okay, so there is no dollar in this, so it's a cross rate. Fine. 1 Swiss franc is equal to so many euros. So again, there is no dollar, so this is a cross rate. A currency pair which is written where there is no dollar, we say it's a cross rate. And why do we say it's cross rate? We'll just learn it. Okay. Now, first of all, we must know how do we calculate what is the currency rate, how it is calculated. Currency cross rate is calculated by multiplying the two exchanges. Okay. So how we arrive at a cross rate? It is by multiplying two exchanges. Okay. Now we are learning, what are cross rates. So in the process of learning what are cross rates. So how do we calculate cross rate? By multiplying two exchanges. The USD, that means US dollar, is a base currency in one of the pairing and the quote currency in the other pairing. So that means there should be a US dollar quote. In one quote, it is the base currency, in another quote is the quote currency. Okay. So let's look at this. $1 is 75 rupees. Okay. Now, if you just don't know what is the base currency or the quote currency, just $1 is equal to 75. This is a European term. Why? Look at the right hand side. It is rupees. So if it is not dollar, it is European. Okay. If it is dollar, then it is American. Now look at the second quote. 1 euro is equal to $1.13. Okay. So this is an American quote because it is having a dollar sign on your right hand side. So one currency pair is American. Okay. The second one, and the first one is European. So now once these two quotes are given, we can find the cross rate. That means the rate of euro in terms of dollars. Now, because dollar is the main currency in the world, all other currencies rates are derived through dollar. So that's the logic for cross rates. Okay, fine. So $1 is equal to 75 and 1 euro is equal to 1.13. So if these two currency pairs are such that one is American, okay, one is European, another is American, then we can just simply multiply. So I'll solve some question on the board, but first let's understand some theory. Okay, so this is rupee upon dollar, rupee upon dollar. This is dollar upon euro. So we just write it like this: rupee upon dollar and dollar upon euro. So this quote is $1 is equal to 75 rupees. So we put 75 on the top and dollar as the numerator. Sorry, rupees as the 75 rupees as the numerator and dollar as the denominator. And here we take dollar as the numerator and euro as the denominator. Okay. Then the dollar cancels out. So we are left with rupee euro, which means how much 1 euro is equal to how many rupees. And then we simply multiply them, the rates which are given. So 75 multiplied by 1.13 will give you the rate of euro in terms of rupees. I'll just explain that again. First of all, you should have two quotes. Okay, one should be European, another should be American. Okay, of course it can be both be American and European also. You can still calculate, but first let's learn through a very simple way that one quote should be European, another should be American. Okay, the first quote is European because it says $1 is equal to rupee 75. The second quote is American because the American sign is coming on the right hand side, which is the home currency. Okay, so just to find out which is European and which is American, so the second quote has to be American and the first quote is European. So that means we have the quotes in order. Once we have the quotes in order and we want to calculate what is 1 euro is equal to how many rupees, then with the help of this, we can, put the formula as rupee upon dollar. So this can be written as rupee upon dollar into dollar upon euro. So dollar cancels, only now rupee upon euro will remain, which can be expressed as 1 euro is equal to how many rupees. Okay, so we can just simply multiply these two quotes because they have to multiply. So 75 rupees multiplied by 1.13. So we'll get 1 euro as 84.75. Okay, now why we do it? The question is why we do it. Now, because dollar is the main currency of the world. About 10 to 15 years back, and even still, okay, but it is done digitally, but physically, when you have to travel anywhere abroad, about 15 years back, even if you're traveling to England or Europe or Japan, you used to buy dollars in India first. Okay, and then go to that country and convert your dollars into the currency of that country. So first, you have, suppose you are Indian, okay, so you will buy dollar. Okay, suppose this is the dollar buying rate. So so you pay 75 rupees to buy $1. Then you go to Europe, okay, and sell your dollar and buy euro. Okay, so 1 euro is costing you $1.13. So that means this 1 euro will definitely cost you more than 75 bucks. So you should have more dollars. So 84.75. Okay, I'll repeat it because the logic is, which is age-old logic, which we used to do it, in the manual days when we used to go travel abroad. We used to always buy dollars whichever country we are traveling. Go to that country. First, we buy dollar in India. So you should have a dollar buying rate. So the first rate is dollar buying rate. Okay, assume this is a dollar buying rate. Then we go to Europe and we want to buy euro. So this is the euro buying rate. So we will surrender our dollars and buy euro. So which means if we multiply the keys 2, we will get the rate of euro. Now, if you're traveling today to Europe, you will get a euros in India itself, but it is calculated with the help of the dollar rate. Okay, so now you don't have to buy dollars even if you are going to euro. So you can buy your euros in India itself, and the broker is doing the job for you. So he is calculating the exchange rate at the back end through the dollar rate. Okay, so dollar is a mechanism through which the rate of other currencies are calculated because it's a powerful currency and the main currency of the world and the most commercial currency in the world. Okay, fine. So that's the logic. So, so one has to be, European, one has to be American. I've explained you. So if that quote is in order, then we can do it. Okay. So now I'll move on to the board. So we'll be doing some questions. Okay, fine. So this is, exercise number 12, which we are going to do now. So I'll just see whether you are able to see my board properly. I'll just check that before I start. Okay, I think the board is visible. So I'll just open up my exercise side by side so we can do it. So this is, exercise number 12, okay? So we are doing exercise number 12. So I would like that you people to participate and solve the questions once I've solved one, okay? So we are doing exercise number 12, okay? $1 is equal to euro 0.88, okay? 1 yen is equal to $0.0093. Okay, so it is given that $1 is equal to so many euros. I'll just put the euro sign properly. Okay, $1 is equal to so many euros. Okay, and 1 yen is equal to so many dollars. Now, what will be the price of 1 yen in terms of euros? So this is the question. Okay, fine. So $1 is equal to so many euros. 1 yen is equal to so many dollars. Now look at this code first. This is what? This is a European code. Okay, I write E. So this is European. This one is American. Wonderful. If one is American, one is European, then the jobs become very easy for us. So now what I'll do, I'll write euro here upon dollar at the bottom. So the numerator will be the euro and denominator will be dollars, multiplied by the dollar as a numerator and yen as a denominator. Okay. So dollars cancels out. So I'm left with euro upon yen. Okay. Which means essentially that 1 yen, okay, I'll just put it here. So which would mean 1 yen is equal to so many dollars, okay, so many euros, sorry. So I can just simply now multiply it, okay. So just multiply and tell me what is the price of one, Japanese yen. What is the price of 1 Japanese yen? So 1 Japanese yen will be equal to 0.88, okay, 0.88 multiplied by 0.0093. So just put first without putting any signs of the currency, and then we know because we'll be getting in euros only. So 1 yen is equal to multiplication the 2, which is yen 0.00818. Okay. Is that okay? So very good. I think some people have got it. Okay, great. So now the second question, you have to solve it through your own self. Okay. So I won't be solving till I get answers from you. Okay. So exercise number 13. Okay. $1 is equal to rupees 75. Okay. 1 pound is equal to $1.26. Fine. So tell me, what will be the price of pound in terms of dollars? Okay. So if $1 is equal to 75 and 1 pound is equal to 1.26, $1 will be equal to how many? How many rupees? Sorry. Okay. So just to give you the logic, you can just solve it. If you're traveling abroad, okay, say about 20 years back, you used to buy dollar from India. Buy the dollar from India. So this is the dollar buying rate. Go to, England, buy pound from there and sell your dollars. Okay. So that means you require 2 quotes to calculate the price of the pound. So this has to be, one has to be European. So this is European and this is American. So the quotes are in order. So you don't have to do any kind of a jugglery or any kind of a problem. So because I'll be giving you some question which will become little different. First, you have to convert the right quotes into the right ways. Okay. So here I'm just giving you a very simple way. I'm giving the quote in the right order so that you can just simply do it by a simple mechanism. Okay. So please solve this. So what should be the price of 1 pound? How much should be the rupees? Here. I'm still waiting. Yeah, 94.5. So I've got the answer from some of the students. So this is 75 multiplied by 1.26. If you do that, it'll come to 94.56. Sorry. So let's do yet another question. Let's see, it's a simple one or it's a little bit googly here. So let's do that. So this is, okay, so this is an example basically. So I'll just, put this. This may not be in your exercise. So $1 is equal to rupees 75. Okay. $1 is equal to pound 0.79. Now tell me what will be how much pounds I have to, suppose I want to purchase a pound, how many rupees I have to pay. Now these are the 2 quotes which are given to you. Okay, fine. Which is $1 is equal to 75 rupees and $1 is equal to so many pounds. So I want to calculate the cross rate. Now tell me, what is this quote? This is European. This is also European. Fine. So first convert the European quote into the American quote and then use the formula. Okay. So which means here we have to calculate 1 pound because, after buying, dollar from India, I like to buy pound from England. So I must know what is the rate here in terms of dollars. So which will be 1 divided by 0.79. Okay, fine. So the 1 pound will be equal to that. So if I solve this, what I'll get? I'll get $1.27. Okay. So now this quote is become American. So this has become, I've converted the European quote to American. Now I can just write the equation: rupee upon dollar into say dollar upon pound. Okay, so dollar cancels. So I have rupees upon pound, which means 1 pound is equal to how many rupees? Okay, so I need to now multiply this with this. So 75 multiplied by 1.27. So how much I get? I get rupees 95. 95.25. Okay. Okay, great. So you get 95.25. Is that clear? So this is £1. Okay, so now I'll be giving a question, so you solve it yourself. So I won't be even doing anything. I'll be just waiting for your this thing. Okay. So you can see on your screen, $1 is equal to euro 0.88. And $1 is equal to pound 0.79. So how much £1 will cost in terms of euros? So please do it. So $1 is equal to euro 0.88. Okay. And $1 is 0.79 pounds. So tell me, what will be the price of £1 in terms of euros? So first look at both the quotations. The first quotation is in European. The second quotation is also in European. So which means that you need to first convert the second quote, which is in actually, because you want to calculate what is the price of pound in euros. Okay. So first, you will like to, because you are, going to Europe. So the first quote is in European terms, and the second one is in also European. So you have to convert the second quote into the desired quote. So the second quote you need to convert into American terms. Okay. Because, you want to purchase euros. Okay. And you are in England. Fine. So you want to buy euros. Okay. So, what is the price of £1 is equal to how many euros? Okay, fine. So you will be doing £1 is equal to 1 divided by 0.79. So you will calculate in terms of dollars. Okay. So once you have done it, you have both the quotes in order. Okay. So the first quote is in European terms. The second is in American terms. So you just simply multiply and use the formula. Okay. European upon dollar into dollar upon Europe into pound, you get European euro upon pound. Okay, so that means £1 will be equal to how many euros? So the answer is basically £1 is equal to how many euros? Okay, fine. So here, who will be interested to know the price of pound? The European. So the European guy wants to buy pound. So first he has to buy a dollar. Okay. So you should know what is the rate of dollar in terms of Europe. So that rate is already given to you. Okay. Then he'll go to say England and convert his pounds into dollars. So you should have, a dollar buying rate, sorry, the pound buying rate, which is £1 is equal to 1.27. Since we have changed that quotation now in terms of pounds. So we have both the quotations in the order. So we can just simply multiply them and get the answer. PPT not visible. Okay. Okay, because sorry. Okay, I think that was my mistake. So I'll just do that. Okay, so I'll just start afresh here. So now I think you can see the PPT. So there was some problem where you couldn't see the PPT. So this is the example. $1 is equal to 75 rupees. So this is the example which we did. $1 is equal to 75 rupees, and $1 is equal to pound 0.79. So we have to calculate the price of pound in terms of rupees. Okay. Fine. So we want to know what is the price of £1. So as an Indian, we would be interested to know, suppose we are traveling to England, what is the price of pound? So first what we do is that we buy dollar from India So we have the dollar buying rate, but we don't have the pound buying rate. Okay, because that is written in the other order. So we'll convert the order here. Okay, so we'll have 1 pound is equal to $1.27 by calculating the reciprocal of the second quote. Okay, so now we have both the quotes with us. The first quote is European quote. The second is called the American quote. So both are in the set order. So we can just now multiply the two quotes, the rupees upon dollar into dollar upon pound. So dollar cancel out. So we have rupee upon pound, which means 1 pound will be equal to 95.25. I think most of you have done correctly. Now move to the second one because the PPTs were not visible. So that's why I'm just putting across again. So the second example is that $1 is equal to euro 0.88. Okay, and the second quote is that $1 is equal to pound 0.79. Okay, so we have to calculate what is the price of 1 pound in terms of euros. So basically, that means the European person is traveling to England and he wants to know what is the price of pound. Okay, so that is the European guy will be interested to know what is the price of pound because we want to calculate what is the price of 1 pound in terms of euro. So first, in his own country, he is going to buy dollars. So the first quote which is given $1 is equal to euro 0.88 will actually give him dollars. And then he goes to Europe and converts those euros into pounds. So the second quote is not giving you that fact. Okay, so we need to convert that. So because he has to go to England and buy pounds by surrendering euros, by surrendering dollars, so he needs this quote. Okay, so now he has got the quote. So now both the quotes are available. Okay, just I repeat, this is a European guy who wants to buy pounds ultimately. So first he is going to buy dollars. So the dollar quote is already there on your screen, which is a European quote. The second quote is an American quote where he will like to buy pounds by surrendering dollars, by selling dollars. So both the quotes are in order. So we can now use this equation and we get the final answer here. Okay. So are you able to get it? Okay. So is this clear? So 1 pound is equal to 1.88. Yeah, I think you have put it right. Cost up. Okay. So I think you have followed this. Okay. So let's move on to now yet another exercise. Okay. So so I'll do this exercise while explaining you on the board. I mean, not on the board, but through this PPT. So these are the things which are given. Okay. So these are the three quotations which are given to you. US dollar, $1 US is equal to 107.31 yens. Okay. 1 pound is equal to 1.26 US dollars. And 1 Australian dollar is equal to 0.70 US dollars. Okay. So these three quotations are given. First, calculate the cross rate for pounds in terms of yens. So that means 1 pound will cost you how many yens? So here the Japanese guy is looking for, he's traveling abroad, he wants to go to England, he wants to know what is the price of the pound. So this we have to calculate the cross rate of pounds in terms of yens. Then calculate the cross rate for Australian dollar in terms of yens. Here again is a Japanese guy, okay, who wants to visit Australia. So he wants to know what will the cost of Australian dollar in terms of yen. How many yens he has to pay to get 1 Australian dollars. So this is the meaning of this question. The third, calculate the cross rate for pounds in Australian dollar terms. So the cross rate for pound, 1 pound is equal to how many Australian dollars? So this guy is an Australian. Okay. So he wants to travel to England and he wants to buy pounds. So he wants to know how many dollars he has to spend to buy 1 pound. Okay. So let's begin with answering the question. First, calculate the cross rate for pounds in yen terms. So which means 1 pound is equal to how many yens? Now, who would be interested to know that? a Japanese guy because he's traveling to England and he wants to know how much yen he has to spend to buy 1 pound. Okay. So now we have the two quotes given to us. The first quote is already given. That means $1 is equal to so many yens. So what he'll do, he will immediately buy $1, or the number of dollars by spending 107 yen for buying $1. So this is the dollar buying rate, which is given in European terms. Then he'll say go to England and buy pound. So he should have a pound buying rate, which is also already given in the question. 1 pound is equal to $1.26, and which is in American. Okay, so dollar buying rate is given, pound buying rate is given to you, and both are in either European or American terms. So this becomes our task easy. We can just simply multiply them. Okay, so we're left with yen upon pounds. So which means 1 pound is equal to how many yens? So that will be by simply multiplying 107.31 into 1.26. So we get 1 pound will cost a Japanese guy 135.21 yen. So a person who is traveling abroad from Japan, to get 1 pound, he has to pay 135.21 yen. Okay. So I think, Ambika, you have done it right, 125. Now do the second one. Calculate the cross rate for Australian dollar in yen terms. Okay. So I'll just put it, the question, I'll go back to the question. Okay. The question is this: calculate the cross rate for Australian dollar in yen terms. Okay. Do this second question first, the B part of it. Cross rate for Australian dollars in yen terms. So again, this is a Japanese guy who is traveling to Australia. Okay. First, what he'll do, he would like to know how much $1 cost in terms of yen. The rate is given to you. Then he would like to go to Australia and buy, Australian dollar and sell US dollar. So the third quote, which is Australian dollar 1, is equal to US dollar. So that quote is also in order. Okay. So we can solve it. Okay. So just solve it. So both the quotes are given to you. One in terms of US dollar is equal to so many yen. The second one is 1 Australian dollar is equal to so many. So both quotes are given. So he'll go and buy the dollar. Okay. In Japan, which will cost him 107.31 yen, which is in European terms. Now he goes to Australia and buys dollars from there. Assume that. Okay. And he needs a Australian dollar quote. So he knows that 1 Australian dollar will cost him so many US dollars. So by simply, multiplying this, we get 75.11. Yeah, absolutely right from Mumbai, Ambika. Okay. Now we come to the, it comes to 1 Australian dollar is 75.12. Okay, great. So now calculate the cross rate for pounds in Australian dollar terms. Okay, calculate the cross rate for pounds in Australian dollar terms. So here we are trying to calculate the price of pound in Australian dollar terms. So this guy is in Australian, okay? So he wants to buy pounds. So he's traveling to, say, England, and he is an Australian. So he would like to know what is the price of, 1 pound in terms of dollars, okay, when he goes there. So, if you look at this quotation, it is given as 1 Australian dollar is equal to so many US dollars. So this is an Australian dollar buying rate, which is an American. Okay. So we'll convert that into the European, because he would be actually going to, Australia and converting his dollars into Australian, he will be buying US dollar, converting his Australian dollars into US dollars. Okay. So he needs, he will like to buy Australian dollars. He will like to buy US dollars. Okay. I stand corrected. He would like to buy 1 US dollar. So he knows how many Australian dollars he has to spend. Okay. First, then he goes to England and converts his US dollar into pounds. Okay. So let me just put it right again. A little bit of confusion created. So let me just explain that. So this is a guy who is an Australian. he is traveling to England. Okay, he wants to know what is the price of pound in terms of Australian dollars, because he is an Australian. He'll have the Australian dollars with him. So first, he would like to know the quote of US dollars. So he's going to buy dollars. But unfortunately, in this question, it is given the price of one Australian dollar equal to how many dollars? So first, we'll convert this quote in terms of dollars. So $1 is equal to how many Australian dollars? Now he understands, for buying one US dollar, he has to spend 1.42. And this is in European code. Then he goes to England and purchases pound by selling US dollars. So this is an American code. It's a pound buying rate. So now we just, do this multiplication and calculate the rate. Yeah, I think 1.78, 1.8. Yeah, Ambika is done. Pujita is done. Very good. So this is what you get. Okay, fine. So this is the answer. Okay, fine. So 1 pound is equal to Australian dollar 1.80. Great. I think a couple of guys have done it properly. So let's now move on to another question. Okay. So let's do some more questions, a little bit tougher ones, and some questions from the study material also I'll be picking up. But before we do that, this question. So this is exercise number 15. So I'll stick to the slides, okay? And then wherever needed, I'll go to the board and explain. So if the exchange rate in Mumbai interbank market is US dollar 75.2550 oblique. So I'll rather, go to the board and explain that. Okay. So I'll just stop sharing my slide and go to the board. So this requires a little bit of explanation. So I'll be good. So this is exercise number 15. Okay, I'll use a different pen. Okay, so exercise 15, which is already with you, but I'm going to put some facts of the questions on the board so that you understand. So it is given if exchange rate in Mumbai is given as US dollar 1. Okay. अभी ठीक है? Fine. Okay. Okay. So if the exchange rate in Mumbai is given as $1 is equal to rupees 75.2550, okay, oblique 2600. So this is the rate which is given in Mumbai interbank rate. Okay. So if the exchange rate in Mumbai interbank market is US dollar is equal to so many rupees. Okay. And in London interbank market, and in London, the rate is given as $1 is equal to pound 0.7945 oblique 0.7974. I think the board is visible. I'll just check that. Yeah, the board is visible. So these are the two rates given to you. That the rates. So we just stick up to the rates only. The rate in Mumbai is $1 is equal to 75.2550/2600, and in London it is given that $1 is costing you so much. What would be the exchange rate between Indian rupees and pound sterling? So that means we want to calculate what is the price of £1 in terms of rupees. Okay, but we want to calculate only the ask rate. Fine. What would be the exchange rate between Indian rupee and pound for buying pounds? Okay. Now, from the customer perspective, a customer wants to buy pounds. Okay. So he'll look at the ask rate, which is the ask rate, which is the selling rate of the bank. Okay. So we want to calculate what is the pound rate in terms of rupees. Okay. So let's look at it. Now, this is the rate given first. $1 is equal to so many. So this is the bid price and this is the ask price. Okay. Suppose I want to buy first, I have to buy dollars in India. Okay. Assume that we are calculating the way I explained to you. So this guy will buy pounds first. Okay. Dollars first. Okay. So the dollar buying rate is this. $1 is equal to rupees 75.2600. So this is the dollar bid rate. This is the dollar ask rate. Okay. That means the customer who has to buy dollars, he has to spend these many rupees to buy $1. Okay. So this is one quote we should understand. Okay. But then he needs a second quote, and this is what this is in European terms. Okay. So now the other quote which is given to us is $1 is equal to so many pounds. But now if he goes to England, he has to buy pounds and sell dollars. So this is just the reverse of it. So we like to calculate the pound rate. 1 pound is equal to 1 divided by 0.7974 slash 1 divided by 0.7945. Okay. So this will be the rate in terms of dollars. Okay. Fine. So so that means we'll convert that. Okay. So which will be 1 pound is equal to how many dollars? 1.2540 oblique 1.2586. Okay. So this is the rate of pound in terms of dollars. So first he buys dollars from India by paying 75.260. Then he goes to England and buy pounds by paying this ask rate, which is 1.2586. Okay. So this is the pound buying rate will be, for him the pound buying rate will be 1.25. This is the bank's selling rate, and from the customer it will become the buying rate. Okay. So now we can just multiply these two rates, 75.2600 multiplied by 1.2586. Okay. So we'll get the desired rate, which is rupees 94.722. So how we have got? This is by simply multiplying by 75.2600 into 1.2586. Okay, fine. So this is equivalent to 94.722. 222 rupees. So 1 pound will be equal to so many rupees. So I'll just show it on the slide to you. Okay, just sharing you slide and then explaining you again. Okay, if you have not understood, so I'll just put my slide on. Okay, so the slide is visible to you now. Okay, so the question is that if the exchange rate in Mumbai interbank market is US dollar 1.1 US dollar is equal to 75.2550/2600. So these are the bid and ask rates are given in terms of dollars. Okay, and then in London interbank market, the rate is the dollar is given in terms of pounds. So the question says, what would be the exchange rate between Indian rupee and pound for buying pounds? Okay, so somebody wants to buy pounds. So that means we have to look for the ask rate, which is the bank selling rate. Okay, for the customer, it will be the buying rate will be the ask rate of the bank. Okay, so this must be known to you before we solving the question. So the Mumbai interbank market, we need to purchase US dollar by selling rupee. So first, what we'll be doing, we will be buying dollar and sell US dollar in London interbank market to purchase pounds. So this is what I have explained the logic, what we do to calculate the cross rate. So first leg is buy dollar, sell rupee. Then, so that as an Indian, we will sell rupee and buy a dollar. And then we buy pound by selling the dollar which we purchased in the first leg. So we get the rate. Okay, so this is the logic sequence. So we know that $1 is equal to 75.2550/2660. So here, if I want to buy dollar, what price I should pay? 75.2600. Okay, so this is the ask rate. So the dollar buying rate, the customer rate is $1 is equal to 75.2600. Then I go to England where I have to purchase a pound. Okay, but when I see the quote there, it is not the pound buying rate. So I need to convert that into the pound buying and selling rate. Okay, so then we have to do we have to calculate the indirect quote. Okay, so 1 pound is equal to so many dollars. Okay, and I explained you the rule in the morning that how we convert the direct to indirect quotes. So 1 pound is equal to 1 divided by 0.7974. So the ask will become the bid and bid will become the ask when we reciprocate, when we do the reciprocal of the quote. Okay, so after we have done, we have got the quotation here. So 1 pound is equal to $1.2540 and 1.2586. So how much would be the price of 1 pound in terms of dollar if you have to buy? Then we have to look at the rate at 1.2586. So this is the ask rate, or from the customer's perspective, this is the buying rate. So he has to pay $1.2586 for buying 1 pound. Okay, so now we have both the rates with us. So we just simply multiply them, okay, and calculate the rate of 1 pound in terms of rupees. Okay, now this can be also explained through another way. Dollar buying rate is given to us, pound buying rate is given to us, which we have calculated. Then we just use the formula rupee upon dollar into dollar upon pound. So dollar cancels out. So we have rupee upon dollar, which is nothing but 1 pound is equal to how many rupees. Okay, so this is the answer. I hope you have understood this. Okay, so is that clear? Okay, so yeah, already done. So I hope this you have followed. Now, I will ask you to, solve this question, but I'll give you some clues before you solve this. Okay, the rate between Japanese yen and US dollar is given to you, which is 119.15 and 121.85, and the rate between euro and US dollar is given. Okay, which is given here. And what will be the direct quote between the yen and euro in Japan? Okay, so this is the question which you people have to solve yourself and give me the answer. Okay, so the rate between Japanese yen and US dollar is given, and the rate between US dollar, euro, and US dollar is given. Okay, so what will be the direct quote between Japanese yen and euro in Japan? Now, you must focus on the quote, first quote. This would be mean that one, if we see this is a normal quote, then 1 yen will be equal to so many dollars. But that is not right. So this is a reverse quote. This is the reverse notation. $1 is equal to so many yens. Okay. So don't make a mistake by saying 1 yen is equal to so many dollars. This is $1 is equal to so many yen. Okay. So this is written in reverse notation. Similarly, the second quote is also the same. If one quote is given, the second quote is also a reverse notation. So the second quotation would be that $1, okay, is equal to so many euros. Or not that 1 euro is equal to so many dollars. Okay, fine. So now please solve this. So the rate between Japanese yen and US dollar is given, and the rate between euro and US dollar is given, and both are given in reverse notation. So while putting the quotes in order, you should say that $1 is equal to 119.51 yen, which is the bid rate, and ask rate should be yen 121.85. So $1 is equal to 121.85 yen, which is the ask rate. Similarly, the second quote, which should be read as not as 1 euro is equal to so many dollars, and we all know that in 1 euro you get it should be written as $1 is equal to so many euros, because euro is costlier. So in $1 you are going to get less than 1. So it is 0.8. So 1 euro cannot be $0.80, because euro is if you look at the Indian currency today, it's about 90 rupees, and dollar is about 75, 73 rupees. Okay, so this is in a reverse notation. So first you should put it correctly and answer it. So I'll just wait for a couple of minutes, then I'll move on to look at the answer. So I'll just, now we know that $1 is equal to yen 119.15. Okay, so this is how we put the quote. And the second quote will be euro $1, US $1 is equal to euro 0.8021 dash 0.8033. So now I've put the quotes in order. Okay, fine. So this is how we spread the quotes. Then we know that the first quote is, first this guy will do what? The first this person, because we have to calculate in Japanese terms. So this is a Japanese guy. He would first buy dollars. Okay, by shelling out his yens. Then he'll go to Europe and buy euros by selling his dollars. The second quote is not in order, so we'll like to first put it in order. So we'll say 1 euro is equal to by doing the reciprocal of the quotes. Okay, so 1 divided by 0.8033 will give you 1.2448, and 1 divided by 0.8021 will give you 1.2467. So now both the quotes are in order. First, he'll buy yen in Japan. Okay, first he'll buy dollars in Japan. Okay, by selling his yen. Then he'll take that dollar to euro, and he'll buy 1 euro. He'll buy euro. Okay, by selling his US dollars. So which means that we need to rather we can simply multiply them. Okay, 119.15 into 1.244, because we have to calculate now here both the bid and ask rates. Okay, so it is not that he's going to buy euros there. We can just simply by multiplying the bid into bid and ask into ask. Okay, So 119.15 into 1.2448. So which will give you the bid rate, and ask rate will be 1.21.85 into 1.2467, which is given on the last slide. Okay. Then so that means €1 is equal to so many yen. Okay. So the lower rate is the bid rate. You can look at the rate now. You're getting the rates already in order because it is 148.31 yen per euro, which is the bid rate, and ask is costlier, 1 point. So if when you solve the question, you will get the bid rate as cheaper and the ask rate as costlier. If you have got it, then your answer is correct. So this is a check. Okay. The lower rate is the bid rate and the higher rate is the ask rate. Okay. Fine. Therefore, the rate between yen and euro is, then we can put it in the notation of the question. So euro is to yen is 148.31 and 151. Okay. So if you have not followed, I'll just take you a little bit through again. Okay. So this is basically the question. Okay. Just read the question. The rate between Japanese yen and US dollar is given as 119.15, 121.85. So this is the price of the dollar in terms of yen. This is in the reverse order, reverse notation. So you should put it rightly. Okay. And then again, the second one, which is, talking about dollar euro quote, which is 0.8. Again, this is also in the reverse notation. What will be the direct quote between yen and euro in Japan? Remember, we are calculating the rate in Japan. So that means we have to calculate what is the price of 1 yen equal to, what is the price of 1 euro in terms of Japanese currency. Okay. So 1 euro is equal to how many Japanese yen? Because a Japanese guy would like to buy euro, okay, in Japan. So he wants to know how many, Japanese yen he has to shell out to buy 1 euro. So that is a direct quote of euro in Japan. Okay. So that's what we need to calculate. So the first quote is given to you, which is US dollar. One is yen 119.15. So if you can just go to the Google and find out what is the current rate. Okay. So do that thing. What is the price of 1 euro? Dollar. $1 is equal to yen. Okay. So you will get the price of the yen. Okay. Fine. So maybe my Google is working a bit slow. So 1 euro, $1 is equal to yen 119.15, 121.85. Okay. Fine. So this is, it is 103.56. The current rate is 103.56. Okay. So it is a little bit, in past, the rate was much higher for yen in terms of dollars. Okay. So the rate has become, so dollar has basically weakened against the yen. That means, okay. So the US dollar is equal to how many euros? So US dollar is equal to 0.8021 euros. Okay. So so now we need to calculate. The one currency has to be American, another has to be European. If you remember, the first currency is basically American. 1 US dollar is equal to yen so much. So here the second one we have to be in American terms. Okay, 1 euro is equal to how many dollars? So now both the currencies are in order. The first one being in the European terms, the second one being the American terms. So now we can just simply multiply them. Okay, 1 euro is equal to yen 119.15. So bid will be multiplied by the bid, ask will be multiplied by the ask of both the currencies to calculate the price of 1 euro in terms of yen. So we get here 1 euro is equal to how many yens? Okay. So to check whether you have got the right answer or the wrong answer, the bid price will be always lower and ask will be higher. Because when you go to the bank to buy 1 euro, they are going to charge you 151.91. But if you go to the bank and sell 1 euro, you're going to get 148.31. So you're going to get much less when you go and sell your 1 euro. And when you go and buy from the bank, they will charge you higher rate. Okay, fine. So bid is the buying rate of the bank. Okay, and ask is the selling rate of the bank. They sell higher and buy from you cheaper. Always remember that. Okay. So this was the question we did. Okay, fine. Now we will just move on to go to the MCQ section. Okay, the one question is still remaining, but we'll do it next time. Okay, so let's do some MCQs. Okay, before we end the session. Okay, the pips also, so we will do it next time. So some MCQs. Okay, so I'll expect the answers from all of you. Okay. Great, Pujita, you have got it right. Ambika has also done well. Okay, wonderful. So basics, concepts, MCQs. So just, everybody should participate now. Direct and indirect quotes are dash of each other. A, reciprocal, B, proportionate, C, equal, D, unequal. So what would be the right answer? So Ambika has understood, very good. Pujita is right. Ambika has got it. Chavi, your answer right. Okay. Fine. So direct and indirect quotes are dash of each other. So what should be the right choice? Please put your answers on the chat box. Okay, the answer is reciprocal. Okay, so maybe I'll be getting some replies now because people might have put the replies, but I haven't received them. So this is the first. Okay, the direct and indirect quotes are reciprocal of each other. Fine. Yeah, Chavi has got it right. Reciprocal. Yeah, A. That is reciprocal. Wonderful. I think I'm getting answers from someone. Preeti has also done it well. Okay, the second question. Direct quotation is when one unit of foreign currency is expressed in terms of American terms, cross currency, domestic currency, European currency. Direct quotation is when one unit of foreign currency is expressed in terms of. Now here you can always think about Indian currency, that one unit of foreign currency. So $1 is equal to how many rupees? Okay. So is that a domestic currency, American terms, cross currency, or European currency? So what should be the answer? So the answer is domestic currency. I think you people might have given the answer. Let's see. Yeah, answer is right. Preeti, you have done it right. Ambika also done it right. Okay, now we go to the third question. Okay. Indirect quotation is when one unit of domestic currency is expressed in terms of. One unit of domestic currency is expressed in terms of. Now think about, 1 rupee is equal to how many dollars, which is an indirect quote, which is expressed in terms of American terms, cross currency, foreign currency, European terms. Third is, C is the right answer. Pujita has also got it right. So here I'll just show you the answer. It is foreign currency. Okay, fine. I think yes. I think most of you have done it right. So C. Yeah, wonderful. These are the easy ones. Okay. So bid is the price at which the dealer is willing to dash another currency. Sell currency, buy currency, hold currency, dispose currency. So bid is what is the bid price from the dealer perspective. Is it the buying price? It is the selling price. It is a hold price. It is a dispose price. So bid is the price at which the dealer is willing to. So there are two prices which are given. One is bid, one is ask. One means buy, another means sell. Okay. So what should be the answer? What should be a response here? The response is basically the buy price. So I think I'll be getting soon answers because you people have already punched your answers. So what should be the right one? Yes, so the absolutely right, Kaustubh. Ambika, you have done it right. So let's go to the fifth one. The ask or the offer is the rate at which he is willing to dash another currency. Sell, buy, hold, dispose. Now, since you have done your fourth question well, so fifth is very simple one. So the fifth would be basically the ask or offer is the rate at which he is willing to, the dealer is willing to sell the currency. So if bid is buying, then ask is selling. Okay, fine. Fifth one, okay. So let's talk about the fifth one, okay. Fifth is okay. So please answer your questions. Fifth one, I haven't received any response so far. Okay, so I'll move on to the sixth one. Okay, so sixth one, please do it, okay, yourself. So I'm not going to put the answer till, yeah, absolutely right. You put answer A is the right answer for the fifth one. So look at this question. John is an American traveler visiting Europe. The cost of purchasing euros at the airport is USD is 1.20 and USD 1.3. Jaws wants to buy 15,000 euros. So how many dollars he has to pay to the dealer? Okay. So the two questions of the similar nature I'm giving you. So now please answer them sixth and seventh. So first we'll work out on sixth. So please answer these questions. Okay. So I think by the time you might have put the answer is 19,500. So I think you might have put the answer. So let's see. You get the right answer. So what is the answer for the question number 6? Yeah, 19,500. Okay. So let's go to question number 7 now. MCQ number 7. John is an American traveler returning from Europe. Now this is a traveler who is now coming back from Europe. Okay. Earlier he was going to Europe. Now he's coming back from the Europe. The cost of euros at the airport is €1 is equal to $1.2 and $1.3 bid and ask rate. Jaws wants to sell euro 3,000. How many dollars he'll get from the dealer? So now he's returning back. So while he going back, he purchased euros. Now he is left with some euros and he wants to sell it back to the dealer. So what is the money he's going to get from the dealer? So seventh is B, okay? Yeah, the answer is B, okay? It is $3,600. Now, this guy is returning from Europe, so he wants to sell his euros, okay? So when he sells, go to the bank. So bank says we'll buy from you at 1.20, but we'll sell dollars at 1.3. So since now he's going to sell his euros, so he'll get less money. So he'll get 1.2. So he'll get 3,600 USD. So he'll be offered a bid price. The ask is price is for buying the dollars. Okay. So let's now do this. The exchange rate expressed by any currency pair that does not involve dash are called cross rates. The currency pairs which does not involve which currency? Okay. Euros, pounds, US dollar, rupees. Okay, yeah, 3,600 is the right answer for the earlier question. Absolutely right. The exchange rate expressed by any currency pair that does not involve euros, pounds, US dollar, rupees. So the cross rates are basically currencies which does not involve which currency. Of course, we calculate it may involve, but ultimately, which currency it is not there. The currency is not there in the cross currency. The answer is US dollars. Okay. So the cross rates, though they are calculated with the help of using dollars, but ultimately they don't contain the dollar. So the currency pair, like how much 1 pound is equal to how many rupees. So though we calculate with the help of the dollar, but it will not have the dollar in that currency pair. Okay, absolutely right, Pujita. Okay, so the spot rate between US dollar and US is given quoted at a bid price of 1.03 and ask price of 1 point different. Okay, so this we haven't done. Okay, let me just see if any question is there. Okay, just now, just can you calculate this cross rate? Okay, so question number 12. Okay. So just one or two more questions, and then we'll wind up the session. So this is perhaps the last question. Okay, 8 is C. Okay, now please answer the 12th one. Okay. So the answer is 85.42. Okay. So now I'll hand over back to this. So we are going to, wind up the lecture now, and we will meet next time. So I'm just going to. Okay. So Vivek, are you there? It's over.